Hey guys, Stock Saturday, and it's been a very rough week. The S&P is down 3.64% for the week, and Nasdaq is down 5.56%. So, with a week like that, I don't think it's any surprise that I've underperformed with this sort of portfolio. I am down about 16%. Crypto is sort of having a rough time of it, and even the gold stocks are sort of taking a bit of a tumble. Tech as well. You see Broadcom down 10.3% after their earnings, which I will come to. And yeah, the sort of rest of the semiconductor industries taking a bit of a hit, and obviously the whole markets are, but sort of crypto in particular. So yeah, let's have a look at some of the news. So we've had Broadcom's third quarter results. They're always a bit out of sync with everyone else because they're obviously this isn't calendar year third quarter because we're still in September, but we've had their fiscal third quarter. Revenue 13 billion, up 47% from the prior year, but that obviously includes the large VMware acquisition, which is sort of weighing on the figures. It seems kind of expected that, and I don't know, maybe people aren't sort of looking into the detail quite as much, or sort of its guidance, but I didn't think the guidance looked too bad either. It could just be people were expecting even more with the AI boom, but yeah, we've had sort of net income loss of 1.87 billion. That's obviously a non-cash charge. It's write downs and things. You know, people sort of liken it to a big snake digesting a pig. You know, it sort of takes some time, and you have some sort of non-cash write-downs and write-offs and things as you're sort of absorbing VMware. And they did forecast this. It's hardly a surprise. It's a 40-cent earnings per share loss compared to 77-cent profit in the previous quarter, or this quarter last year. But you come and look at cash flow, cash flow from operations up to 4.96 billion, adjusted EBITDA 8.2 billion, up from 5.8 last quarter last year, and yeah, the free cash flow up slightly as well. So it's non-cash charges basically, and once they sort of work their way through this, they should have much bigger net profit numbers as well as just cash flow. This is obviously coming from infrastructure software side. That's up to 5.8 billion from 1.9. Semiconductors up slightly with the sort of increase in AI stuff. And yeah, I didn't think it was looking too bad. And the fourth quarter guidance I thought looked pretty solid. Revenue of 14 billion and adjusted EBITDA of 64%. So they sort of said previously, once they digested the VMware deal and acquired the assets, that they were looking at 50 billion for the year in revenue and 60% adjusted EBITDA. So, this is sort of looking more like 56 billion annualized, and there's obviously potential for that to grow, and they're above the adjusted 60% of EBITDA figure. So looks solid to me. Not sure what people were expecting. It's dropped 10% on the news, albeit in a day that everything else is down and Nvidia's been sort of taking a big hit. So maybe people just sell all of the big semiconductor and AI related names. Just coming to the statements then, we can see operating income up to 3.8 billion from 2.9, and it looks like the net loss this month is due to provision for income taxes. So that's a little bit unusual. It's 2.8 billion income before tax and 4.2 billion provision for income tax. So it's non-cash, and this will be sort of resolved over the next year. Stock-based compensation is slightly down from this quarter last year, so that's pretty solid. And balance sheet, we're still comparing this to October 29th, 2023, because this is before the acquisition, so cash is down quite a bit. Inventories are largely unchanged. Other current assets up quite a lot, more than double. Goodwill up, what is that, $54 billion with the acquisition. A lot of intangible assets as well, $40 billion. And then coming down to debt, so debt's increased to $66 billion, long-term liabilities up to 16. So we're getting more assets than debt, obviously. So I think overall, people need to probably calm down a little bit. This was never going to be sort of growing, 100% a year like Nvidia. They're getting a benefit from that, and obviously they got the acquisition, which isn't all that related to the AI side. But yeah, looks good. Dividend stayed the same. That's not really that important to me. It's well below the earnings, so there's no sort of issues of payout ratios or anything, and it's just a nice dividend to get. But I don't really focus on sort of that growing or base investment decisions from it. So yeah, 53 cents, as you say, I think 52.5 cents per share, which is just a tenth of what we got before the stock split. So yeah, all good. So on to the Bitcoin miners. I'm doing all four because we have had all four operational updates. So I'll be somewhat brief. CleanSpark did really well, 478 Bitcoin mined, and they're keeping pretty much all of this. They seem to be selling 2.5 Bitcoin pretty much every month. So they're now at 7,558 Bitcoin on the balance sheet. Very, very strong. Need to see what sort of shares outstanding is growing to, especially with their acquisition of grid infrastructure. So it does look like Riot have probably got the better acquisition of the two, but there you go. They're acquired them, and they're sort of slowly growing now. 22.6 exahash. Riot are pretty much there and going to be sort of way above that by the end of September. So yeah, CleanSpark's still above Riot's market cap, but sort of as I predicted, but didn't actually do anything about. Riot has been outperforming CleanSpark recently, albeit on the downside. So yeah, that's unfortunate. So I was talking about potentially selling some of my CleanSpark and buying Riot, but I didn't bother. I have sold my options in CleanSpark and put them into Riot, and yeah, I'm just holding my CleanSpark in the ISA. They do have sort of expansion, obviously. Dalton is a very small 15 megawatt expansion, but that is expected to be energized and fully hashing by next week. So that's pretty good. Sandersville, 50 megawatts, expected to be energized and fully hashing by mid-month. So we'll see a bit of a boost for September, and then a bit more of a boost in October, because this is mid-month. And then Wyoming is going to be a little bit later on. That's going to need some building. And then they obviously haven't actually acquired grid infrastructure just yet. So yeah, that expansion will be a little bit later on as well. So then we have Riot Platforms, and it's not looking all that great as far as mining goes. Bitcoin produced was down, even on rising total deployed hash rate. The sort of takeaway appears to be that it was too hot because they're in Texas and they have to shut down quite a bit. So yeah, 322 down from 370. Deployed hash rate stayed the same at Rockdale, stayed the same at Corsicana, and it went up ever so slightly at Kentucky. But operating hash rate went down in Rockdale. This is, I believe, replacing some of the faulty machines, so we should see the benefit of that in the next sort of couple of months. Corsicana, I think this is where they had to sort of shut down a little bit because they are still expanding Corsicana, but August is the hottest month. And Kentucky, slight increase in operating. But as a result of this shutting down, they do obviously get paid their power credits and demand response credits. So that's up from 3.4 million to 6.4 million, albeit this month last year they did get $28 million. So it's quite a bit down from that, which is a little bit of a shame. They actually had negative power cost, a very significant negative power cost in August last year. So yeah, it's not too bad. I mean, if they had have been, if it wasn't hot and they were sort of fully hashing, they might have mined sort of 75 Bitcoin more, which is sort of 3 or 4 million, and they've got 3 or 4 million extra in power credits. So not the worst thing, but could be better. At least they are sort of keeping all of the Bitcoin, none sold, and the held amount has reached 10,000. So that's a bit of a milestone and good to see. And yeah, they're obviously sort of showing their updates, and they've reiterated the 28.1 exahash by the end of next month now, or the end of this month. So that's 3 weeks away. Hence my sort of lack of enthusiasm for CleanSpark, to be honest. Riot are lower market cap, looking to have 28 exahash by the end of this month, and have 2,500 more Bitcoin on the balance sheet, and sort of a much cleaner road to expansion. Just in the next in Q4 they're looking to expand to 36.3. That's already in place, everything bought, they're just building, and then up to 43.6 and 56 next year, and they don't have to sort of buy anything more for this. It's just building what they've got. So yeah, maybe I should have swapped that CleanSpark out for Riot. So looking at Hive, this is my fairly large options bet because I still think they seem undervalued. Prefer Riot for the sort of just solid, known, building and large expansion. People seem to sort of reward large expansion, and that isn't what Hive are doing. But hopefully when Bitcoin sort of increases, then the money that they're making should just start to make sense to more people. But they ended the month with 5.3 exahash, achieving a blended efficiency of 23 joules per terahash. So that's still a little high. Increased Bitcoin to 2,567. So yeah, they're upgrading some of their miners as well. They acquired 1,000 Bitmain S21 Pros, so these are sort of pretty much the newest they've got for immediate delivery. They do say that's how they prefer to buy these. They're not into sort of paying up in advance for a large order of miners in 6 months. They tend to sort of wait, and obviously they'll get the latest thing and have it delivered immediately. And they purchased 300 S19 XPs. So I thought these were fairly old these days. I thought everyone was at least going for the S21s or the Pros, but I guess if they got a really good deal, then you might as well buy them. They do say that they just work on return on invested capital, and yeah, so that might be what was sort of best value at the time. And they're looking to get to 13.5 exahash after the Paraguay expansion now, where I think they were sort of saying 12 before. So yeah, 13.5. This is upgrading the existing to 6.9 and then 6.6 in Paraguay, and they should have a blended efficiency of 16.9. So that is pretty low. And then the AI side, they haven't really given too much detail. They did obviously in the Q2 earnings, but yeah, it would be nice to sort of see a little bit more numbers in the operational updates. We'll have to wait for Q3 earnings, I guess. I do think this is sort of something that people are missing out from their earnings. They obviously mined Ethereum, so they've got all these NVIDIA GPUs, and they're putting that to work on AI. So yeah, they're not getting the love that CleanSpark are, that Core Scientific are. But hopefully, if they can grow that, then yeah, it should do well for the stock. So speaking of Core Scientific, it's obviously a much smaller position of mine. I only hold this in options and have sort of been considering making a switch because they are sort of holding value quite well. Obviously, with they have the largest AI deal out of anyone pretty much. They're not really growing. They've gone to 20.5 exahash self-mining, up from 20.1, making a few small changes. And they earned 358 Bitcoin, down from 411 last month. I think this is, again, sort of downtime in the heat. Hosting Bitcoin was 90, down from 110. And yeah, they're at 24.8 joules per terahash, so slightly worse than most of the others. But they're converting some of this to the AI side, so we'll see. But yeah, if you take the sort of fully diluted once all of their warrants and things, from the bankruptcy time come through, then I think they're at 410 million shares. And yeah, so that gives them sort of similar market cap to CleanSpark and Riot, really, when they're at sort of 20.5 exahash, not growing at all. And unless I'm mistaken, they have 0 Bitcoin because they still essentially have to sell everything because of the bankruptcy agreement. So they've sold 22.5 million Bitcoin, and yeah, they have 0 on the balance sheet. So compared to certainly Riot and Hive, I think there is better value than Core Scientific. They're getting sort of a lot of benefit for their large AI deal. And obviously, as Bitcoin's price is lower, that AI deal is fixed price. It sort of looks far more attractive. Maybe people are sort of switching over to them. They're saying they think they can expand and grow that AI revenue as well. But the more they move into AI, the more they look less attractive as Bitcoin goes up, because of course that AI price, or the AI business, is fixed price, as I say. So if Bitcoin were to go to the sort of 6 figures, mid 6 figures, then yeah, it starts to look sort of much less attractive. So coming to the economic news for the week, I think everyone was expecting sort of fairly poor results. We had some sort of ISM numbers, ever so slightly worse than expected, but pretty much on schedule. Jolts, everyone sort of got worried about this. 7.6 million jobs, that sort of means people are advertising less jobs and there's sort of higher supply in the US market. I didn't really sort of take all that much from that. ADP non-farm employment was 99,000 compared to 144,000 forecast, so that was a bit of a knock, but it does look like people still aren't really getting laid off as such. Obviously this is, it's worse than expected, but it is still a 100,000 job gain. It's not negative. Continuing jobless claims came down. Initial jobless claims was down as well, both down from previous month and quite a bit down from expectations. And yeah, we had the ISM non-manufacturing PMI, the sort of bellwether for the economy. That was 51.5, ever so slightly higher than last month and higher than expectations. So yeah, the whole recession claim doesn't really sort of jive with that as such. Halifax house price index as well, 4.3%, pretty much as expected, but how is it still 4.3%? Mind boggles. And then Friday, yeah, you had the non-farm, the proper, I say proper, it's obviously a little bit fake, as we've seen recently with 800,000 jobs being revised downwards in the last year. But this month's was 142,000, slightly worse than the expectation of 664, but quite a bit up from the admittedly revised downwards 114k. It was 114k, it's revised down to 89, but you know, it's what is that? 28,000 jobs up from the unadjusted number. So pretty good. Again, you know, it might be lower than expectations, but it's not negative. So 142,000 jobs gained doesn't sound like a recession unless it's going to suddenly get drastically worse. It is all of this loss pretty much is in, or not loss, it being worse is in the private sector. So government spending and government jobs are still pounding away, and unemployment again, you know. People saying once the unemployment goes above 4%, it usually rockets up to 6%, and as expected, it came down 0.1%. So again, doesn't really sort of jive with recession. So portfolio-wise, everything looks pretty awful. As I say, I've lost £47,000, I believe, this week. I have put 4 in to Interactive Brokers, and I should highlight as well, I made the sale of Rio Tinto. Could have sold for a better price. It was sort of $48, I think, just about a week ago. So yeah, that's not ideal, but iron ore came right the way down into double figures now. It was sort of hovering around the hundreds and sort of into the low hundreds, and then suddenly dropped to $92 and then 91, and sort of Rio's dropped a little, but not that much really. Again, after selling Vale, just think normally you would expect the miners to be a sort of leveraged move on the underlying commodity price, and they're not moving quite as much. Obviously, they don't do all iron ore, but I do think people play up the other metals in sort of people like Rio's portfolio. You know, say that they're a copper play when they're 10% copper, or 12% or something. I mean, they do the same amount in diamonds, and that's not a sort of sector that I'm particularly bullish on. So yeah, it had to go, and yeah, Glencore is sort of potentially next on the list, albeit they don't do any iron ore at all, but nickel sort of looks pretty awful as well. Sort of reading numbers from Indonesia, they're doing sort of more nickel than you can really want at the moment. So yeah, Glencore's nickel business doesn't look like it's going to be valuable anytime soon. And obviously they do coal, so nobody really wants coal. Yeah, gold and silver down, surprisingly. Or the miners are down at least. The gold price is actually doing really well. Silver sort of underperforming, back to sort of 90 gold and silver ratio. So yeah, that's not ideal, but I think when the results start coming out, certainly for people like Equinox that are 100% gold, it should start to look very, very profitable, and people will say, oh Christ, why are we paying $5.21 for this when it's making a small fortune? But yeah, we'll have to wait till sort of October time for that, or November time, I suppose, for Q3 results. On the Interactive Broker side, so again, Pan American Silver down a bit, I expect, on the silver news more than anything, and just general sell-offs in the stocks. KGHM sort of holding up pretty well, with copper sort of seeming to have bottomed around $4 and sort of rising up to into the 410s and 420s at one point, I think. And the Interactive Brokers options side, Chinese tech as well, sort of dropping ever so slightly, still sort of about 3,700, 800 in that, so it's potentially a sell if I want to put some more into the options, and I put a load more cash in last night. So we'll see. Obviously, pretty much everything is down. I am down 13,000 on the account now, or with current holdings. That doesn't include previously realised positions. Haven't really worked out what I would be up. I'm not really sort of that focused on results really. I'm more of a current portfolio guy. But yeah, Equinox sort of quite a bit down. I think I bought 5 contracts because I had a sort of low ball bid that got filled, surprisingly. Coeur Mining still potentially on the chopping block because it's sort of fairly high profit at the moment. I bought in sort of pretty low, and the sort of risk reward doesn't look quite as good. Potential upside I think is 6-10 times maybe, sort of in a solid bull market, where Equinox can sort of see much higher than that. So yeah, it's potentially one to switch. Hive down 6,000 now, 46%. Been buying a fair bit more, up to 305 now. Been buying a little bit of Riot as well on the highest strike they've got now. So Riot stock's about $6.40, and I'm buying $35 strikes for next year, or end of next year. They will sort of seem worthless to most people, but I think there's potential there. Himax pretty much down to where I was before. This got up to 24,000 at one point, and I didn't sort of take any off, but yeah, there you go. As I say, Core Scientific sort of still holding high, and is potentially similar to Coeur Mining really. I don't really see the risk reward there. Sort of, I think again there's potential for sort of 5 to 10x in a solid bull market, where obviously some of these others I see much more gain. So potential for a switch there. And yeah, Fortuna sort of just dropping slightly with the other miners, but that's a fairly small position. So yeah, interesting. Have to see where we go sort of towards the end of the year. I'm expecting fairly big things sort of October onwards, and sort of certainly into the election. And we got the wild card of if we get a Trump presidency, then we would expect pretty much everything to rocket. So we'll see. Not long to go. And leave your thoughts in comments below, and like and subscribe. See you soon.